Hello, everyone, and welcome to yet another episode of Grow Your Wealth, a series brought to you by BQ Prime and powered by Groww, the investment platform that's easy, fast, convenient, and transparent. Well, investing in the stock markets is something that Indians have really been looking into in the last couple of years. And why not? We have seen wonderful stories of individuals getting into the right trading momentum and being able to make their wealth and even grow it, in fact. And that's the reason why we have decided to bring about this series, which will, we hope, help you investors make more informed decisions and use the world of technical analysis to make better profits. I have with me Dr. Narayan to help me do that. Dr. Narayan is a veteran of India's financial markets and respected as one of the finest exponents of technical analysis in India. He brings with him nearly 4 decades of experience and insights on the Indian markets. He has been a part of large broking houses, catered to retail individuals, as well as headed large institutional desks servicing FIIs. He is the founder of Neo Trader, an AI-based trading and analysis software. Dr. Narayan, thank you so much for joining us in this episode of Grow Your Wealth.
It's my pleasure to be here, Mubina.
The topic that we want to discuss today is momentum trading. It's, along with price action trading, another pillar of technical analysis. To start with, Dr. Narayan, tell us what exactly is momentum trading and what does it aim to capitalize on?
Well, answering your second part of the question first, it capitalizes on the onset and or continuation of the momentum. Now, what is momentum and why is it really important is mainly because a body at rest, it goes into physics, and let me quote something from physics, that a body at rest remains at rest until some momentum is imparted to it. And conversely, therefore, a body which is in motion will continue to remain in motion as long as momentum continues to persist. So this is the foundation behind the study of momentum. Now, if you think about stocks as a kind of an object, and if people don't buy it or sell it, that stock will remain where it is without moving at all. It's only buying and selling which will make that stock move either up or down. And hence, therefore, in the marketplace, as far as stocks are concerned, buying and selling is the element which creates what imparts momentum to the stock. Now, in the market, speedy returns is the objective, and therefore, anything which moves with some pace, which moves more speedily, is the one which will give you a little bit of faster return. So let me show you on a chart how this thing can actually look at, right? So allow me to share my chart with you just here so that I can indicate to you what could be momentum. So here is a chart where I have a candlestick chart on here. This is the Bank Nifty. And then at the bottom, I have on here a momentum indicator. Now, if you look at, let's say, this juncture of the momentum indicator. Now, I have marked a horizontal line here at a certain level. And when the momentum indicator surpasses that, it is actually signaling to us that the stock is becoming speedier. If you notice here, this entire portion of the stock has been seen earlier and has been transpired. The market has moved through this area several times in the past. But as soon as it stages a breakout, you will see that also on the momentum indicator, right? Now, this is what a momentum indicator or momentum really tells us. It tells us about the onset of momentum on the chart and leads us to participate in a speedier area of the price action, and that way we can make more money in lesser time.
What are the different kind of strategies in momentum trading, Dr. Narayan, that you often deploy?
Well, to start off, there are virtually hundreds of momentum indicators. Okay, I just showed you one on the chart. I think it was Welles Wilder way back in 1978 who actually introduced the concept of momentum to the marketplace. And today we are in 2022, and that's about 50 years that we have all been using momentum. And therefore, most of the newer developments which are taking place in the field of technical analysis, particularly as the computing power of machines go higher and higher, most of the focus is on momentum. And see, momentum is a basic element which is required for the prices to move. So, like I told you about the physics law of Newton's law, a body at rest will not move until momentum is kind of applied to it. So, we have to look at these momentum indicators, as they are called. There are very many, as I said, and we have to use them as per their strength. Now, each of them is derived in a different way. I showed you one of them on the chart that was called relative strength index. Now, there will be so many more. Each is different from the other in the form of constructs. So some of them are there which are quite subtle. Some of them are there which are very overt. Some of them are slow in the kind of signals they give. Some of them are very swift or fast moving in the way that they signal you. Time frame for the trade can be decided based upon all these momentum signals. So they can help you approach the trading and investing aspects in a variety of ways. And knowing momentum indicators is very important, therefore.
In a nutshell, and like you very well explained, using a law of physics, when a momentum is identified, or rather when you use momentum trading, you are counting on that particular momentum or trend to continue. But how do you identify the exit point? It's extremely important to do that as well, right? Because you will take a certain position in a stock or in an index, expecting that move to continue. So it's important that you exit that position just before the trend reverses. How do you identify that?
Absolutely, absolutely. And typically, most of this is done by, let's say, traders in particular. They use target setting. So you see, when we talk about price action, it's about identifying an entry point, right? To identify what prices are doing up, whether an opportunity is getting set up. Once an opportunity is set up, the prices run. That is when a trend ensues or unfolds. And after the trend runs on for a distance or for a while, it is time that it may get exhausted in the shorter time frame, while it may still run in the longer time frame. So you usually apply targets, and most people tend to work with targets. They will be either, let's say, monetary base. I want 5,000 rupees from this trade, or it could also be percentage based upon your equity. So if I make, let's say, 1% of my trading equity in a matter of a day or a week, etc., that could be one way of setting. The second way of trying to take off a trade would be based upon a technical analysis of it. Now, technical analysis is a large subject, so you can have many tools applied for an exit of a position. So there are tools which can be suitable for entering a position, and there are tools which can be used for exiting a position. There are specific tools, and there are many tools which can be used, for both the function, but in a slightly different way. Now, momentum, which we were speaking about, momentum reversal is also one way of exiting the trade. So when you talk about momentum reversal, see, momentum always precedes price action, because you have to apply. See, it again goes back into physics that a body at rest actually needs the application of momentum for that body to start moving in space. So if you think of a stock as a body at rest, it needs the momentum applied by way of buying and selling, of throwing money at it or throwing stocks at it, for that stock to move either up or down. So momentum always precedes price action. So reversal in momentum, if we are able to spot it, can also give us an idea. Now, this momentum reversal or onset can be looked at in different time frames. So if you are using, let's say, a daily chart, you can look at exhaustion of momentum or reversal of it in a lower time frame chart, or vice versa. If you are looking at a smaller time frame chart, you can look for the onset of, a larger momentum in a higher time frame chart. So it's a very flexible thing that one can use, and it is one of the most vital areas or most important areas in the field of technical analysis. And entire tomes and books and lots of stuff is devoted to the study of momentum. And if one can learn it well, one can really profit from the market.
Dr. Narayan, you mentioned that momentum trading was introduced as a concept somewhere in the 70s or the 80s. Do you think that this method of determining profitable trades is a little more riskier than the other methods like a price action or any other technical analysis forms?
Well, you see, when you're dealing with trading or investing, you're basically taking a bet on the future, right? And you're acting in the present. So therefore, we have to understand that whatever we do in the present with an anticipation of the future is always risky. So what we are really doing through technical analysis or even fundamental analysis is trying to reduce the amount of risk that is attendant on any trade or investment. Now, can momentum indicators give us a reasonably good read or reduce the risk? The answer is yes and no, right? Because unless you know all the momentum indicators well, you will not be able to use them. So therefore, it presupposes or presumes that you have studied these momentum indicators well. Now, when you are trading, your stop losses could be far away or the stop losses could be near. You can use momentum indicators to judge or justify setting of stop losses. You can use them to, estimate the chances of whether the prices will continue to rise or higher, or they'll stop here. You can choose through momentum indicators as to what is the trade-off between holding on to a position and taking it off right now, taking it off partially, taking it off completely. So when you use momentum indicators, you will get a certain amount of answers, not at any time the complete answer, but certainly a certain amount of answers as to how you should play that particular stock. And momentum is an important consideration because momentum always precedes the onset of price, because it's only when you apply momentum to any body which is at rest that the body will move in space, right? So stocks are like bodies at rest, and the money you throw at it, and with the force with which you throw the money at it, that is what moves stocks either up or down, right? Either you give a demand or you give a supply. So demand supply determines whether the stock will move up or down. And then the momentum aspect comes in, and we see whether it is moving with momentum or the momentum is reducing, increasing, etc. So it's always a trade-off. And for knowing that trade-off and judging it, you must learn and understand and internalize momentum indicators very well. It's a big chapter within technical analysis, and you'll be very handsomely paid if you understand and learn it well.
Well, here's a tool of investing or technical analysis, which probably physics majors will do very well in, as Dr. Narayan has explained, a law of physics used in trading in the stock markets, momentum trading, where you capitalize on a certain trend to enter a position. Very well explained as well by Dr. Narayan with the help of live charts. Thank you so much once again for joining in. And with that, we've come to the end of yet another episode of Grow Your Wealth. Stay tuned as we'll continue to bring you more and more episodes of technical and fundamental analysis.